I know. Some of you still haven't done your first real estate investment yet because you're waiting for the right market. A lot of you are holding on to your cash because your stock market might not be doing right, your Bitcoin, crypto, right? Tech is not doing well, and you might have lost some money over the last 6 months. Well, why should you be in the game in real estate? Is because real estate, yeah, there's ups and downs, there's cycles, right? But the worst thing you can do is actually sit on the sideline and not do anything. You might be afraid, well, what if I lose money? Yeah, you've experienced some money loss, possibly in every other asset. But in real estate, the reason why, I'm not saying it's 100% safe, but the reason why it is safer than, say, stocks is because it's less volatile. So there's not a lot of ups and downs, peaks and valleys, as you would with other investments. Now, the key thing in making investments in real estate, it's actually partnering up with the right people. See, you have the right people, you have the right asset, you have the right location, and that's how you know it's going to be the right investment for you. So how do you vet people? The operators are really, really important. You have to look at, well, ask them questions, right? As a real estate investor, you should be able to ask questions, and whoever is working with you or whoever you plan to work with should be 100% really just transparent with you about what they've done. Hey, how long have they been doing real estate? Have they seen cycles? Have they worked with people that's gone through an up and down cycle, right? Where is the asset? What is their own experience? See, how much money do they have putting into the deal? I always talk to operators, and sometimes once in a while, you find ones that are like, well, I found this deal. It's a great deal, but I don't have any of my own money in the deal. For me, that's a red flag. For me, that means that you don't believe in your deal enough to put money in. When we have investors that are investing alongside us, we always have money into the deal. Okay? So that's one of the first things that you should ask them is vet the operators. Talk to other people, right? Maybe you could say, well, can I see some testimonial, watch some testimonials? What is the portfolio like? What is their past markets, locations? See, what have they done before? Did they just go from really small and all of a sudden they went huge on the first deal, right? Or did they build up slowly and they have their team operationally? Who's operating it? Who is asset managing it, right? So vet the team, number one. Number two, vet the location. See, the more you know, the more you will feel confident about the investment. Because yes, you might be scared to invest because you don't know. See, those who have confidence, who understand the market, are not afraid to invest in a down or a up market because it's good either way because they know the market. Even if it's down, they invest right now, it's coming back up, right? So they have to buy it correctly. Now, looking at the market means a location, right? It could be, say, a city, right? Metro area, sometimes people call it. Are they in the Dallas area, the outskirts of Dallas? What's the market that you're looking at? A primary market is something that is in the metro. Secondary market is a little bit further on the outskirts, right? And then tertiary market is all the markets around, a little bit more rural than your cities. So you have to look at, okay, are there jobs going in, right? Is it stable? Okay, are people moving in? Are people leaving? You don't want to invest in areas where people are just leaving the state or leaving the town, right? You want to invest in areas where people are coming in, all right? Where companies are coming in. That tells you that the town, the city, the state is actually growing, all right? So we've covered operators, we've covered the markets, right? Now we have to cover the asset class. What do you like? What do you like depends on what you're shooting for. Industrial warehouses can cash flow really well, but they don't really appreciate. Do you need the cash now? If you need the cash now, you might want to look at things that are cash flowing well. Maybe industrial, RV parks, public storage areas, okay, storage facilities, they cash flow better, but they don't really appreciate. Now, do you need something that's going to appreciate in the long run, but you don't have to need the cash flow right now? Multifamily apartments, B class, B plus, A, these fancier apartments, they will appreciate really well over time, but they may not cash flow as well. So it really depends on where you are in life, right? And on top of that, you might want to ask questions like, hey, how long does it take for the apartment to stabilize? What does that mean? Well, when we first purchase an apartment, the first 3 months we're going in, we're remodeling, we're raising rents, adding amenities. So the first 2 to 6 months may not have cash flow coming in, right? So as an operator, we have to look at, okay, what is best for the business overall? You might start getting cash flow at 6 months, right? At 9 months, okay? Maybe at 3 months. So you really have to know, okay, when am I going to get my money back? What does the refinancing look like? What does the sale look like? Is this a short-term hold, 2 to 3 years? Or is it a long-term hold, 5, 7, maybe even 10 years, right? So you have to know these things. As an investor, the more you know, the more you're going to feel confident about what you do. The more confident, just with anything, that you know about what you do, the more likely you're going to invest. Compounding is so huge. You invest earlier, you will be so much further ahead than someone who's never done it. If you like, let's hop on a call, right? And I can talk you through what investments are like. I'm not saying you have to invest with me, but just get educated. Look around our website, subscribe to our newsletter, and I'll see you soon.